Ladies and gentlemen, thank you for joining me. This is the final panel discussion of the day. So you all get bonus points for staying late this afternoon. I'm leading the discussion on investing in startups and driving entrepreneurship. I have an excellent panel of speakers. Sadly, one of our panelists had to drop out for a clash of meetings, so Abdelghani Darouri from IBM won't be joining us. But I'm going to ask my panelists, starting with Adedana, to introduce themselves briefly, who they are and what they do.
Good afternoon, everyone. I don't know.
Yeah,
okay. Good afternoon, everyone. Okay, there we go. It's good to see some familiar faces. My name is Adedana Shebber. I'm the regional manager for Africa at Village Capital. Village Capital is a venture capital firm. We find, train, and invest in early-stage startups, solving a variety of problems in agriculture, fintech, of course, which is why I'm here, energy, education, and health. In terms of the how we do what we do, which is the most important, we run sector-specific workshops. We're actually in the middle of one right now for fintech. And we run an investment readiness curriculum with our entrepreneurs, and then they themselves select who we should invest in. So we actually are not the investment committee. The entrepreneurs themselves make that decision.
So it's a bit upside down, that one. I like it. Yeah, great.
Good to be here. Thank you.
Rob.
Hello, good afternoon. I'm Rob Burnett. I'm CEO of a company called Well Told Story. Some people in Kenya will know us for this magazine called Shujaz. Probably,
hands up if you know it.
Probably none of you have ever read it. Because it's explicitly not aimed at bankers. I think I can say that. But we produce this magazine and a huge array of other media on an ongoing basis in Kenya and in Tanzania. In Kenya, we reach just over 50% of all Kenyans aged 15 to 24. And in Tanzania, we are rapidly approaching the same number. So we're around about 8 million 15 to 24-year-olds follow this story through this magazine. We're the world's biggest producer of comic books. Imagine that, printed here in the industrial area. So, and through the story that we get people to engage, we're able to create absolutely enormous social and normative change, which we track and measure, and ultimately it's what we then give to our clients, is our ability to change people's behavior at enormous scale and create value for young people as well as for our audience. So we consider ourselves to be experts in the youth space, talking to youth across East Africa, what motivates them and what hinders them.
And a quick question, who are your clients?
So we work with a combination of big corporates and big developments. Unilever, Microsoft, Coca-Cola, Gates Foundation, US government, government of Kenya, government of Tanzania, those sorts of players.
And entrepreneurship is one of the things that you are pushing through the cartoon.
I mean, we better do it, right? We better do it. Because with 1 million young people not going to get jobs and entering the job market every year, maybe it's a bit more than that, 1.1 million people seeking jobs, new job seekers every year in Kenya alone, not going to find a job, what else must they do? They're going to have to hustle at least, and they're going to have to be entrepreneurs at best.
Okay, thank you. Mike.
Thank you. So I'm Mike Masharia and founder CEO at 7 Seas Technologies. So at Technology, we have been in the business for the last 18 years trying to solve some of the large or big African problems or in our communities using healthcare. So some of the projects we've been successful and sort of projects that you know about is like the likes of the Huduma centers, which did deliver services for the common wananchi. That was one of our vision projects. Today we are working closely with government and both private and public sector, trying to drive the whole issue of technology and healthcare in the whole issue of universal health coverage. So how can technology play a role in delivering that promise? Another project we're currently working on is the whole gig economy and the whole labor ecosystem marketplace. So we use technology to sort of solve these big problems. Right? And then what we do, we bring in large global players to team up with us, and we orchestrate that value, but we then bring solutions that solve those problems.
And you're also on the board of Endeavour, is that right? Endeavour Kenya?
I'm also on the board member, vice chair at Endeavour Kenya, which is a global organization that helps enterprises scale up. So some of the Endeavour entrepreneurs in Kenya have sort of now we've selected them as Endeavor entrepreneurs, and we're helping them scale across the world.
Fantastic. And Claire?
Good afternoon, everyone. My name is Claire Munene. I'm the CEO at M-Survey. We're a startup. We fundamentally are shifting the way feedback is created or collected and collated in emerging markets for our customers. Well, there are a wide range, all the way from corporate. So we have some of the banks locally, your KSP, your CBA, insurance companies, like Liberty and the like, hospitality. So we're looking at Java restaurants. I mean, it's a wide range in our telcos. We also work with NGOs and academia as well, because these are all collecting data to use in one form or another. We have a little presence in the Caribbean. Our main headquarter is Kenya. This is where M-Survey started. However, we are looking this year and have begun to go into parts of the African market, specifically Nigeria and South Africa.
Fantastic. Okay, I want to start by looking at the business environment here in Kenya. So Mike, can I just come to you first and just, as a successful businessman, how would you rate the business environment here? Is it innovation friendly? And is it, how quickly can you set up a business here? Is it a business friendly place to be?
Okay, I think the question, that's a sort of quite a deep
question.
But from a point of
in.
view, the thing is, in terms of setting up businesses, in terms of regulatory framework, I think today Kenya is one of the few countries where you can set up a business without too much hassle. So that is those problems, we no longer have those problems. I think the government, to a large extent, has made significant efforts in sort of doing that. And that's why we've, in terms of ease of doing business, we sort of have gone up the numbers. I think the issue is, do we have the basic ingredients to drive startups and an entrepreneurship ecosystem? I think we have. That I'm sure we have. The question, I think the question is, what do we need to make it successful? I think the issues of human resource, the issues of are companies or startups trying to solve big problems? Are we just trying to do a copy and paste kind of approach? Okay. What's the role of capital, and how is capital structured in this marketplace? Yes, we may have a good regulatory framework, but maybe the capital structures are wrong, right? Maybe the human resource fundamentals are wrong. At the same time, how do we access opportunities? If you ask an entrepreneur looking at B2C, business to consumer, their thinking is very different. If you talk to an entrepreneur thinking business to government, they'll probably think about gatekeeping, they'll think about bureaucracy, they'll think about other things. They'll say it's very difficult because of maybe gatekeeping opportunities or gatekeeping challenges. But if you talk to another entrepreneur looking at B2B, as a startup trying to sell to a large enterprise, again, there are also challenges. There are challenges of perception, challenges of bureaucracy, challenges of what if we buy from this guy and something happens. So those are all challenges to figure out. So the challenge is, as an entrepreneur, where do you play in this marketplace? Yet the regulatory framework is there, but there are very many other imperfect situations. So how do you balance that whole ecosystem and scale ahead?
Yeah, we're going to come on to the challenges that entrepreneurs face, but let's look at how entrepreneurs should be encouraged and why. And Rob, you touched on it at the beginning. I mean, it's super important that entrepreneurs are encouraged, but how do we do it? How do you do it?
I think that, there are several elements that we've been able to observe in our media and in the reactions that we track through research to show how do our audience respond. So I think that above all else, there's a mindset, isn't there, that entrepreneurs bring. And there's a sense of growth, and there's a sense of curiosity. So I think that's the first thing that we attempt to imbue into the stories that we're telling, into the media that we're making. I think the second piece is a sort of hunger for the customer, to understand the customer and to serve the customer. And I think that's another, it's a mindset, it's an attitude that's critical to an entrepreneur. And then there's the operations of running a business. And for us, at the level we're at, it's about how do you manage your money. And I think often we see young business people, and well, this pocket is for me and this pocket is for my business, and it's really a lack of discipline in money management. And I think for me, these are the skills that we can teach. This is how we expand the pool, and this is how we turn struggling small businesses into successful small businesses. And it begins from a tiny seed that we need to plant And we need to get through, well, the education system would be great, but even in the absence of the education system, it's something that can be done to point out to the millions of people who are going to have to make it this way that they can be more and more successful by applying simple disciplines to the way they run their lives and the way they run their enterprise.
So you think entrepreneurship can be taught?
Well, I think natural entrepreneurs just come out. But I think what we can do is we can grow that pool, and we can expand a shared understanding of what the key skills are that result in entrepreneurs flourishing.
Claire, I mean, do you have a view on encouraging entrepreneurs? I mean,
Yes, it's somewhat similar to Rob's,
Yeah.
but just conflicts in the sense of the last point he said, where he said he thinks they're natural entrepreneurs alone. I think it can be taught in the sense that when you look in Kenya today, the education system sort of teaches us that we go to school, we do well, we get a job. And so we're all focused on that path. However, based on my own experience, going through that, working through a corporate, and making the choice to shift my thinking, and not based just on what I saw, but actually through being taught by other entrepreneurs to say you can use your skills and your talent and tap into that to be able to manage and run a new business. So in that sense, we differ, but I think also success stories. I mean, one of our greatest challenges as a startup today is talent. Talent in the sense that being able to tap into the talent that can drive our business. Startups and most small businesses are seen as risky, uncomfortable, not stable. And so until we shift and share the success stories, then I don't think we'll have many people aspiring to run businesses.
and Mike, let's come on to sectors. I mean, you're in the healthcare sector. What sectors and areas are particularly ripe for entrepreneurial disruption and development?
I think fintech-driven platforms, let me put it this way, fintech technology-enabled platforms that will allow intermediation between demand and supply. So whether it's in the case of agriculture, right, you've got companies doing that, like, I guess, what are the companies called? In agriculture space. Trigger Foods, for instance, right? Mm-hmm. You've got companies that is in agriculture, right? You may have others in healthcare. So I think platforms using technology, fintech is very advanced in the marketplace in Kenya today. Then looking at ecosystems of platforms that enable combination of fintech, a supply chain, and e-commerce, that'll be a great opportunity. Number one, not requiring brick and mortar, but requiring some level of intellectual capability, understanding of platforms, data, and that I think would be businesses that can scale up between 2 and 10, within 5 years, those businesses can be large businesses. I think that is what will happen easily. We've seen Alibaba, we've seen those kind of companies in China. That is happening. In the area of anybody trying to focus on bottom of the pyramid, the BOP segment. We just had the guys here in microlending talking about BOP. I guess that's going to be the next area of growth, whether it's supply of food stuff, whether it is healthcare. Today, our business, to a large extent in healthcare, is focused on the BOP. Because who goes to government hospitals? It's really the 80% of the society. So everybody goes to all these middle class and upper class hospitals. Those are sorted. But when you look at the lower end, there's massive infrastructure, community health workers, the point of level 3, level 4 hospital, level 2 hospitals. There's massive opportunity to solve those problems, whether it is drug supply chains, whether it's data, whether it is human resource using technology. Those are all opportunities.
And if we're looking at the challenges that entrepreneurs face, what are the, we've talked about bureaucracy and so on. What are the, Adidana, what do you see as the main challenges for not just Kenyan entrepreneurs, but we're an East Africa conference. Sure. Let's talk about other countries as well.
Access to capital is a big one. Raising capital, raising talent. I think talent is something that I'm really glad that Claire mentioned it. It's something that we see as very important as Village Capital, and so we've built a platform to help address that for our portfolio companies. And I find that more and more venture capital firms are starting to have in-house talent/human capital staff to help manage some of those concerns. I think there's also a lack in general terms of mentorship. So from entrepreneurs who have quote unquote made it, who have scaled their companies, I think finding the ability, or rather trying to access them, that's a I don't know if that's necessarily a challenge, but I think that's something that just came to mind while speaking. That's a really important way to help encourage, which goes back to the first point. But I think anytime you talk to, and I talk to companies all the time, it's always money. Everyone always says money, 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 money. So I think there are plenty of firms that are coming in, but and I know we'll touch on it later in terms of the type of money that is here. But for now, that's where I'll stop. Yeah.
Rob, from your perspective, what are you reach out to millions of Kenyans, and what are the challenges they're facing, in starting businesses and.
So for us, I think that when we look at sort of big social change, norm change campaigns, we like to. There's a tool we use which is motivation, opportunity, and ability. So we say, well, in order to create a social movement, you need to have all three of those things. People have to be motivated to make the change, and they also have to have access to the opportunity, and they have to have the skill set or the knowledge required. And I think the different work that we do, we apply that triangle differently. So, for example, we do lots of work on contraception. How do we get teenagers not to have babies by mistake? We've had enormous impact on that, but there we don't focus on access, because really, actually, in Kenya, contraception is available pretty much everywhere. And we don't focus on skills. We don't think that you have to put condoms onto bananas anymore, to demonstrate how they're used. Actually, the challenge is neither of those things. It's all about motivation. How do you get it interesting to young people to use contraception? But I think in the entrepreneur space, it's a different equation. So motivation is through the roof. Everyone wants
to earn money.
Everybody wants to earn money. Everyone wants to be their own boss. Most people accept that they're going to have to be their own boss. So then it's about ability and opportunity. So, and actually, even on those two sides, it's ambiguous. We get so many people writing in saying, I've got 10,000 bob. I've got 5,000 bob. I've got 25,000 bob. What do I do with it? So actually, the problem more than anything we see is this idea about where are my opportunities? How can I turn that money into something? How do I de-risk that small investment, which could be all the money that my family and I have got? How do I make that wager? And where am I going to get the skills to make sure that it flies? So, I mean, we're working on that. We're building something called the Hustler MBA, working with...
I love it. What
so
an amazing
specifically
thing.
to say, because young people aren't going to college, where do you learn how to be a hustler, right? You learn it from your friend, and your friend may not be the right teacher. So how do we use the internet to create a body of knowledge to disrupt the education space and say, actually, we can provide people with the best possible mentors and actually then an access to finance based on the data trail that they've developed. So we think there's scope in there to overcome those last two pieces, ability and opportunity.
Fascinating. Mike, I mean, you started up your company. What was the biggest challenge that you faced?
You see, challenges as you grow your business. Today we are 18 years old as a company. The first 3 years, the next 7, like that, I think every segment of your life as an entrepreneur, challenges are there. And those challenges, one, are inherently inside the organization, but also externally looking at the environment around you. When I started the business, the problems today that we have today are very different from when we started. When we started, there was nothing like cloud services, nothing like technology. It was very, very alien. Today, you've got, as an entrepreneur, you can wake up and have a business on the cloud overnight, right? Those were very different challenges to us those days, right? So today, I think, and I want to differ a little bit with my friend, that I think the focus we have a big focus on startups. And that maybe is a problem. I think it's a big problem for the country. Because we talk about startups, right? So if you look at the market today, we have a lot of startups doing a lot of 1 + 1 = 1, right? As opposed to 1 + 1 = 4. Then you've got very large companies on one side. Then we have got this big missing middle in this country today. So what happens is, for some reason, as we have grown through as a country, the missing middle is becoming bigger and bigger. So the big companies want to do business with the big companies, right? The small companies are struggling to do with these companies. And ideally, in the middle, there's a whole missing middle. And there are many reasons for that. One is capital. The way capital is structured in the market, it's structured in the wrong format. Number two is also the fundamental drive of entrepreneurship in the country. Today, we've got the big 4 agenda. We've got housing, we've got agriculture, we've got health, and we've got what else? We've got agriculture, and we've got something else. Now, those are the big 4 agendas for the country. Now, for me, the way I look at it is that entrepreneurship should be at the heart of those ecosystems. So if we're talking about building housing, for instance, across the country, low-cost homes, we should be thinking how to backhaul the whole process by trying to figure out who will supply the sockets in all those homes, right? So we have to figure out the whole ecosystem value chain, right?
Yep.
It's agriculture. Now, if we build our common big plans with entrepreneurship at the middle of our big plans, what will happen is there will be opportunities for the scale-ups. The scale-ups are going to give business to the startups. The startups are going to move ahead. Entrepreneurship capital will be changed because what will happen as a big entrepreneur, successful entrepreneur, I'll invest in one startup. So the issue of VCs is going to be sorted, right? And I think rethinking the whole structure of startups, scale-ups, large organizations, and how they fit into each other is critical before we figure out what is the problem. There are very many problems, and I'm sure I can sit here and tell you lots of problems. But I think that's not the point. The point is, what we need to do, what is the big picture that can solve what is the Holy Grail to drive entrepreneurship in this country?
So there's a corollary to that, actually. So just as there's a bit of a fascination with startups, I think there's also a fascination with founders. So not very much emphasis on the team, like who's actually going to help execute this vision. There's nothing wrong with founders and CEOs, don't get me wrong, but there's a rush to jump to that without the requisite experience, and some of that maybe working for somebody else, working for a company, getting a certain amount of experience, and then using that to pivot, use what you've learned, and start something of your own. And that's something that I've seen as I meet more and more entrepreneurs through my work. Just as there is a fascination of startups, on a related note, there's also a fascination with the ones who are starting it. And what about the folks mid-level management? What about the folks who have to also get it done? We need that too.
And is there a need for, you go to some countries and they have SME authorities, startup, there are all these sorts of different ways of governments who try to encourage entrepreneurship, startups. Is there an ideal framework, or is it just, you just have to organically come up with something? What's the, is there something that you could follow, or is it just you have to find your own way?
Maybe I could answer that, but from a Kenyan context, one of the things that Kenyan government has tried to do, because we have private sector. I sit in KEPSA, which is a private sector foundation, partnerships with private sector. And on one side, we have government, and we have lots of conversations between government and private sector. And yes, these issues have come up. How can we help? The issue of capital. What can we do, right? We have all these SME funds, youth fund, what fund. So I guess the government has sort of come back and said, look, we need to consolidate all these funds into one fund. Call it Biashara Fund. This becomes a bigger fund, which is almost like a wholesale fund that guarantees retail banks to be able to lend into the last mile. Now, what happens is today the banks are saying that, look, you're too risky. But if government could come in through a wholesale framework, be able to guarantee 50% of the debt, that would change that. Those are some of those initiatives.
Yeah.
The next initiative is things like, for instance, how can we create a government or private sector structures that allow a large company like Safaricom to buy from women, or to buy from this company, or to buy from this company? That I think is important, because it allows organizations, allows scale-ups and startups to then work together, right? So I guess the role of government is there and has to remain, but the question is, where should they get involved? I think in the case of Kenya today, the Biashara Bank is a great opportunity, okay? Number two is also the role of government in opening up new markets. Our president went to Mozambique last week, right? So it means that as the opportunities in Mozambique are opening up, it means there could be certain organizations that go and take advantage of those opportunities in Mozambique. That I think is important. The role of PPPs in a public-private partnership. Yes, you have a massive project in government, right? And from a PPP point of view, awarded to a French firm. How does that French firm create value back-end to sort of tap into SMEs or the larger level of SMEs in terms of offering things like training or opportunities to subcontract for those companies to scale? So there are different ways to look at it. But I think government being the biggest spender, number one, having the large mass in terms of investment or capital, has a big role to play in driving entrepreneurship across the country.
Yeah. Adidana, do you want to comment on that? How do you see the roles of policymakers versus mainstream finance versus donors and civil society?
I think there's definitely more room for collaboration, but even in the time that I've worked in this space, I've seen an increase, which is great. I know the World Bank is a part of collaborating with the Ministry of Industry and Trade and Cooperatives, and so there's been several meetings with a bunch of players in the scene, whether it's venture capital firms or entrepreneur support organizations. So I think people are trying to get on the same page as we've realized that we're now, we've had these venture capital firms, we've had these co-working spaces, we've had, a lot of the different pieces of the infrastructure, but to what end? What is it that we're working toward? So I think folks are starting to wake up to the fact that we do need to work together. I'm still trying to figure out the role so I know nonprofits can be involved, and so this is another panel that I'll be speaking to in a few weeks, but how can nonprofits get involved with the quote-unquote impact/social funds that are also have similar aims, but have a different way of going about it? I think there's an interesting conversation there. But I do think there's not enough, even though there's more than there used to be, there still isn't enough collaboration with everyone who's working toward seemingly the same goal.
Yeah. Claire, you were a startup. Did you feel that the ecosystem was in place to assist you? And what were the main challenges that you faced, when starting M-Survey?
Well, from our experience, there are so many incubators and those kind of structures in place to support you as you begin. But I think the main things, and I'll still go back to that, not to belabor the point, but it talks back to what my friend said earlier, is talent. That was our biggest pain. It still continues to be our biggest pain, in the sense that when you now know the direction you'd like to go, the vision is clear, the money is in place, who is going to take you there? The talent that could take you there is not willing to be a part of that vision or that dream or that package. And why? Because it's not very clear how they'll get there. It's not seen in this side or in this corner of the globe as being stable. Most of the startups that have made it, even in Africa today, are seen as one-hit wonders. Oh, they were lucky. And when you come up and you're starting to pull yourself from down, it becomes really hard. And what is going to make you successful is actually the talent that will drive you. Yeah.
So there's not enough talented people to move your startup from one stage to the next.
So the talent is there. It exists. We have a lot of talented people, for example, in Kenya today. But are they willing to work with startups? No. No,
having equity when you're in the U.S. might sound exciting. You can say that to people and they will get it. Like, oh, okay, that sounds nice.
Yeah.
But if you tell people that at a family dinner here, what does that mean? And so, can you eat? Like, do you have food? Like, how does that actually? No, it doesn't have the same. What's the word? Sexiness or whatever that it would in other markets.
I think that there's an insufficiently clear trail to success. So I think what we see is recruiting people away from the finance industry or recruiting people away from telecoms. So these formal jobs still hold enormous power over would-be recruits. So it's very hard to get people to say, no, I'll turn my back on that because the family and societal pressure to say, no, you've made it. Why would you step away from that to go and work in this apparently high-risk startup community?
Yeah. So it's a cultural
thing at that point.
Yeah. Okay.
But I think also further down, there's another challenge, and that is, what's our education system producing? And have we got the right mindset again, coming out of the 844, the secondary school system, which is not very conducive to dynamic, inquisitive inquiry, and is much more inclined to systematic learning and repetition.
Yeah.
And I think that actually at scale, that makes an enormous difference to the mindset, the point of view of young school leavers who are not necessarily with that, they're not in pursuit of new knowledge in a way that we would like them to be to step into that new space.
And Adidana, I want to come back to the finance side and investing in startups. Can you talk to me about some of the options that are available? And also, we heard earlier on the previous panel about the difficulty of kind of investment and exiting and so on. So perhaps talk to me a bit about that.
Sure. So I can speak to what we do at Village Capital. There's 3 methods of investing that we use. Debt is a big one for us. Equity, of course, is on the table, but another that we have used, especially in order to meet entrepreneurs where they are and try to both add value and create value, is revenue sharing. So that's something that we have done as well. We typically invest in post-revenue companies, but we have invested in pre-rev companies as well if we really believe in the team, which goes back to the talent question. And I think it's also just very important to be aware that investing in startups early stage in this market requires very, very, very patient capital. Yeah. So when I frequently have meetings with investors who've come from other countries and they give me kind of what they're thinking of in terms of their timelines, I have to temper that a little bit. Because it's not a 1 or 2 year game. Yeah. This is something where you're in it for the long run. You believe in the team, and you want to see this team grow and succeed. What was your second point now about the
exiting? So how will investors exit?
Well, I think we're still all trying to figure that out. Okay. It's still early goings. I mean, there have been exits in a variety of other sectors, but I think in terms of startups, we haven't seen that same success, which is, I think, why we have panels like this and why we have initiatives where we have ecosystems coming together to figure out, okay, like this is what the end goal is, but we haven't gotten there with seemingly all the right pieces in place. Yeah. So what is it that's wrong? Is it that the wrong pieces? Is it that the pieces aren't doing what they're supposed to do? There isn't necessarily a clear path on that.
Okay. Is there, to make capital more available, Mike, do you think the regulatory regime needs to be changed at all?
I think, yes, for sure. I think there are different ways in which the regulatory framework could change because, for instance, if you look at pension funds, today pension funds are not allowed to invest in, I would try to imagine one of the pension funds invested in an unlisted company. That would be very suicidal for that CEO, for sure. So that already has to change, right? That's one thing of changing by telling pension funds, look, you can invest X amount into risky ventures. But I think that for that to happen, it also requires ourselves as entrepreneurs to also accept that we need to be honest with our information. We need to put ourselves out there. What does that mean? It means that we need to list our companies. Today we've got a stock market. We've got the main board, we've got the alternate board. And the alternate board, you just need to be trading for 2 years or less, and you can list your company. You don't have to be profit-making. You cannot be loss-making. But if, for instance, the pension fund was then told to buy stocks, and they went and bought those alternative stocks, as we call them, penny stocks, nobody's going to blame them because you're a listed company, right? Yeah. Maybe that's the kind of equity you require, and it's a cheaper equity. So I think that's the first thing. So as a regulatory framework, there's a lot of things going for us. Whether as entrepreneurs we do anything about it, that's something else. So number one, the stock market is available. I think that's something we should look at. In terms of regulatory framework, if I look at what the UK has done, it allows angel investors to get a rebate from a tax point of view if they invested into companies. Yeah. That is something that is not happening here. So today, what is the biggest competition for investing in the market? Real estate. So the biggest killer of investing in startups is real estate. You've got all these people here seated here. Some of them are professionals, okay, in their industries, bankers, retail, whatever, right? But they could be possible angel investors in some companies. But I can assure you, most of them will invest in an apartment. And most of them know that.
But is that because they don't know what the opportunities are in terms of investing in startups?
They know. The issue is not they don't know. They know they invest the opportunities. The question is, how do we exit? Where do I put my capital, right? And then also, there's also what we call the ship mentality. We all go together, right? We need to go somewhere, let's all go together. Now, another very big problem in the market that we have, and I can bring this out, as an Endeavor Vice Chair, recently we launched a report, which was funded by the Bill and Melinda Gates Foundation. It's a very interesting report. What it does a survey it looks at the whole entrepreneurial ecosystem, especially it looked at one segment, tech. It was surprised. Kenya was one of the few countries, when they did the mapping, they realized that at the heart of the influence, in terms of the influence in partners in the tech ecosystem, are donor-based organizations. Donor-based institutions that give capital or provide capital to startups. This was a very dangerous trend. Because what happens, Kenya is the only country where, in the heat map, The people controlling the ecosystem were donors. If you go to Nigeria, you go to Latin America, you go to Asia, that is not the case. What happens is that anybody running a donor organization most likely is not an entrepreneur. Most likely. It's a development scientist, whatever. So what happens in Kenya, the people lending money to SMEs or to these startups, okay, maybe what we call development capital, they're not pushing them hard enough to become successful. So what happens if in those other markets, an entrepreneur like myself, if I was to put money in a company as an angel investor, I'm going to make sure I avail my time and I make sure I push this company hard enough to be successful.
Yeah.
And I'm sure if a banker here invested in a micro lending organization, they're also going to put the same amount of pressure to make those companies successful. So what has happened to Kenya? You've got all these NGO kind of enterprises, right, that are lending to all these organizations. Nobody's working hard enough, right? So what's happening in the system is just coming to, it's almost stalling, right?
Right, okay.
Then what's happening is that because now those NGOs are competing with angel investors, Mary here has no reason to put money in that company because you can get that money from an angel investor. It's a dangerous situation for the country today that we need to sort of address, right? But moving forward, I hope that if a government could look at tax exemption in terms of entrepreneurs, try and say if you're an angel investor, how do you put capital? If I invested in your company, can I get a return? Look at the issue of encouraging companies to go to the alternative market. The government says we're going to put a fund, or we're going to have a whole campaign identifying certain companies that we know are capable to go to the stock market. And going to you and telling me, Mike, we have no choice but to list 7Cs. We have to list the company. So they have to come and tell me, look, we are willing to do whatever it takes to help you list this company. That, I think, those are initiatives that need to happen because when you have a few successful organizations in the stock market, people see exits, everything then else takes into control. The reason why then people buy in real estate, because it's easy. Yes, I bought real estate at 20 million, I sold it at 40 million. That's the story everybody says in the restaurants, in the bars, in the homes. So naturally, you're going to invest in real estate, right?
Thank you very much. I want to see if we've got any questions from the floor. Yes, I've got a couple of questions at the back. If we could have a microphone. This gentleman, and then I'll come to you, sir.
Hello, thank you very much for your good presentation. My name is Mark Ambito. I'm running a company called Mobile for Good Solution, which is a mobile app dealing with M-Health, Agri-Tech, and M-Education. My question basically is actually directed to actually the first panelists which were there, but they can also answer it, that there is no good mentorship for startups in this country. If you look at the ecosystem of the companies that were there, you find most of them have some linkages in Silicon Valley or maybe in Europe. So they have a good network on raising funds out of this country. We have good university people who have good ideas, but they have no people to tell them where the venture capital is situated, in Europe, in Silicon Valley, in the USA as a whole. So they don't get a way on how they can be held up. I know Village Capital has been trying to do a lot of that and in Telcap, but it's not good enough because we need people who are well spread all over so that they can mentor these people. The second point is actually what Mr. Macharia said. I work a lot with ecosystem in India and actually in the edtech, in the fintech industry. A lot of indigenous angel investors have come up in India who actually are people like Macharia, who have been successful and are really now pulling up the small startups. We don't have that in this country. We have people, this angel investment is a cut that I can say the cream of the society do not know about it. So they need to be taught that there's alternative investment scenario. And to finish it all, we have to have heroes who are startups so that at least our role models can see. A good example, it's good that the former minister, Mr. Ndemo, has come in. I've been asking him this question all along. Who is the investor of M-Pesa? It's a good model that it's all over the world. But real Kenyans do not know who is the hero behind this platform. If he was known, then people will see, look at it. This is one of our heroes. I've read a lot of stories about M-Pesa. Some issues say that it was created in the UK by some professors in Cambridge. Then they gave it over to Vodafone. So please come up so that we can build up our heroes so that the youth can see our role models. Thank you.
Okay. Do we want to come to you first, Adadana?
Sorry, what was the
mentorship?
What was the question? No, I didn't. What was
the first question was basically in terms of
mentorship.
Yeah, so what about mentorship?
On
What are you
mentorship,
asking about mentorship?
Yeah, mentorship, that most of the youths who are in the university, like Strathmore University, UON,
Sure.
Yeah, they are not quite aware of who actually they can source funds from. Most of the startups in Kenya, like a branch and the rest, which are doing well in fintech, they are quite aware of the money scenario in the Silicon Valley, in the USA, and they can raise funds. They have advisors who can build them up, show them how to prepare, so that they can access that money. These young boys who are there in the universities have no mentors who can pull them up and tell them, this is what you have to do to get this, access this kind of money. Thank you.
So I think, there needs to be a better mentorship. And maybe, Mike, you can talk on this as well, and Rob, there needs to be
that's
better...
what I alluded to earlier, that mentorship was really key for companies. So that they see possibility models, and also that they get a sense of a path forward. And granted, maybe when Mike built his company, the challenges are much different now, but he has a wealth of information and insights that he can offer, and I know he already does.
Yeah, and that's partly what Endeavour does as well, isn't it?
Yes,
in
I
terms
think
of
for Endeavour, what we
mentorship.
try to do, because we set up Endeavour the last 1 year, I think Endeavour's vision was that. But we know, and I appreciate you saying university and all these startups, we said we can't be the mother and father to everybody in the startup. So our decision was based on, we're only going to work with scale-up, companies with scale-up opportunity or scale-up capability. Number one, they can create jobs. They are solving big issues. They can scale. So we look for those organizations. And we go through a rigorous process to get this organization. So if you look at the board members of Endeavour today, it is people who ideally would never sit in the same table or be in the same boardroom together, because they are people, largest insurance company, largest entrepreneur, biggest bank CEO. We all come together, number one, and the sheer fact that we are 10 of us, or 20, 15 of us, and bringing all this wealth of knowledge, taking Endeavour at a global level, what happens, we have been able to bring almost like 30 mentors. And mentors are not people who are running big corporations, who are willing to become mentors. Why? Because Endeavour has created a structure for mentors to work with. You see, you need to understand, for you to be mentored, the mentee and the mentor have to figure out what is the joint value. You see what happens? The mentees assume that the mentors want to give them something for free, and they really enjoy giving them stuff for free. You see, that's a very wrong approach. I think you need to figure out that as a mentor, I need to feel value given to the mentee, and the mentee has also to give value to me. That's one thing that most of us forget, because else I'll get bored and say, look, I'm tired, I'm busy. That's the first thing. So we need to create an environment that the mentor and the mentee feel there is symbiotic value. That's the first thing, from a mentorship point of view. So we've been able to create an environment as Endeavour that allows the mentees and the mentor to have consistent value for each other.
Yeah.
So for instance, the mentor will know, tomorrow I'll be in Kuala Lumpur evaluating other companies. And the company that I sort of helped mentor in Kenya has just been selected in New York. So you have that you have that satisfaction that this company you're mentoring is sort of scaling. Is that correct?
Yeah.
So we need to figure out if it's from a mentee point of view, are there frameworks to allow that to happen? Then when we go downstream to small organizations, or SMEs, or what you call startups, the scale is too big. Now, what kind of structures do we have? And I guess that's why his business comes in.
I can tell you that I read a randomized control trial report recently which compared kiosk-type businesses. And they treated half of these businesses with a training in enterprise skills, and the other half of the businesses were given mentorship from somebody who was a few years ahead in a similar trade. And it turned out that after 2 years, it was the mentored businesses significantly outperforming the trained businesses in terms of their profitability. So I think that is a critical point, and I think it's critical at every section of the market. And I think to your point, the challenge is how do you structurally deliver that in a way that can be scaled to the millions who need it? Because frankly, we can all benefit from that. Right?
Yeah.
But also in terms of angel investing, if I look in my case, my first VC was my biggest mentor. And I was 25 years old, and he invested in my business as a sort of an angel investor. But he was with me all along the journey, not because he had more superior experience. So today, if I was to become an angel investor, I'll be the best mentor for any company.
Yeah.
Because I have vested interest to make sure the capital I deploy in that company, okay, is successful or takes off, or I'm able to multiply the same.
So we need to encourage everyone in this room to become a mentor.
Yes.
Exactly,
Okay.
if they've got skills.
There you go. You've all got skills. I'm going to come to our next question, which is this gentleman here.
Okay, 20 years ago, I was an enterprise advisor for DFID. My name is David Cracknell, and I currently run a consulting company in financial services. But the issue that I'm coming across is many of these issues are the same issues that we were hearing 20 years ago. And in fact, I attended the Donor Committee for Small Enterprise Development, which was doing a retrospective at the time, 25 years of donor investment in enterprise development. And they said, not much has worked, and we've been hearing the same issues for 25 years. So that's 40 years, 45 years if we take the entire time. So it makes me think that we need to think differently. The issues are there. They're the same issues, and we're beginning to see some different solutions, which is great. And I particularly like some of the things that Mike and Rob have been saying, because I think they're spot on, and some of the other comments have been really there as well. But we need to be thinking, how can we leverage? It's all about leverage these days. We've got two types of entrepreneur in Kenya. Because there are so many unemployed people, people are entrepreneurs by default. So there's default entrepreneurs, and there's real entrepreneurs. So, okay, we need to be thinking about both of these. How can we help those default entrepreneurs because they need to eat? And how can we help the entrepreneurs that are going to make a big change? Because the solutions in both cases are going to be different. But we need to be leveraging. We've had a technology conference, FinTech. What should we be doing in the technology space to leverage technology, to provide information, to leverage into systems that are beginning to develop? We've not really talked very much about that. In the funding space, yes, we could be doing crowdfunding, etc., and things like that. So there's bits and pieces there, peer-to-peer lending. What should we be doing in the mentorship space in a similar line? What should we be doing to leverage information, the sort of thing that Rob has been talking about, using different channels? I think today we've got huge potential that we've never had before to take the same issues and be innovative about the solutions. And to my mind, I'm hearing bits around the edges, but what I'm really hearing is a restatement of the same challenges. What I'd like to get from the panel is just some thoughts on how we can really leverage the sort of innovations theme of this day in providing some of the solutions.
Panel?
Just to mention probably a small point based on our experience as a startup. I guess not everybody, in my view, can wake up and innovate. Innovation requires empathy. You need to empathize in a certain situation to be able to now look for solutions to a problem. And for it to scale, it needs to be a mainstream solution, not niche. Yeah? For it to actually be at that level. I think what we lack is empathy. Because if you don't put yourself in that situation that you're looking at to solve the problem, it's never going to be solved. Really, you won't have the right solution to actually have an impact.
So I've got a challenge. I've got a problem that we have this magazine with this story. We reach lots of young people, and we're working at the moment with the economics department from Tulane University in New Orleans. And they've been tracking a cohort of our audience for the last several years. And they do something called multivariate regression analysis, which allows them to get to very close to a causal relationship. They can say, well, it was exposure to this media that led to these outcomes. So what they've just come back and told us, and we're publishing it next week, is that we put $168 million into the youth economy last year, over 14 months, the last 14 months. So it turns out that anyone who's following Shujaz on social media and on an analog platform is about $22 a month better off than the average, and the average is only about $27 a month. So you're almost 50% better off. So it costs us about $5 million to generate $168 million only in one segment of our audience. But it's money that it's not going to return to any investors. No one's shareholders going home with that money. And yet, in terms of the transformational potential across millions and millions and millions of young people, it's absolutely phenomenal. It turns out that flipping the switch in people's heads, making them feel more confident about tomorrow, giving them some ideas and some strategies that they can apply in their everyday life, giving them role models and mentors, has a profound effect. And when you spread that profound effect across millions, you create something quite seismic in terms of change. So my challenge is, so I'm not an economist, I'm not a banker. I know, because my economist academics have told me that we've got $168 million in the economy that wasn't there 2 years ago. How do we turn that into a business? Because at the moment, we get some money at the front. That's not our money, that 168. When I mentioned it to some journalists the other day, they said, but how do the shareholders get their hands on that? They're going, well, they can't. But Kenya has got their hands. Kenya, we've got our hands on that money. So there's my answer to you is yes, the innovation, it's somewhere there, but when we're all looking for a fat return on our investment,
Yep.
when the shareholders have to be made happy tomorrow, then that's going to take a little longer.
We've run out of time.
think-
Yeah, go on, Mike.
He has a good point, and I think it's worth the challenge. I think if I look at it this way, we talked about, it's about the moment we are in. We're in the moment whereby today, politically, the conversation around the big four is on everybody's mind, right? Which is agriculture, housing, manufacturing, and healthcare. So the question would be, in my mind, is to say, without being shy, is to say, we need to create X amount of billion shilling companies in those segments, right? And at the same time, we have to create the missing middle of missing companies in those segments and some level of a startup ecosystem that works, right? Today, politically, those conversations, everybody understands. So it means there's going to be a lot of capital, both private and public, that goes into that big four agenda. So the question is, today being the next 5 years, if we are to build the next generation companies, I would say we need to build those companies in those four segments. And those companies may be companies that do business to government, or business to consumer. So in agriculture, for instance, looking at fintech and looking at the whole commodity exchange and looking at how movement of goods happens in agriculture, we're talking about the big four in agriculture, is to say companies that will be able to create marketplaces will make sure they have all the economies of scale to be able to be successful. So for instance, if I'm going to create a marketplace of agriculture, then the government can say, I will invest in the warehousing, for instance. So your work is just to create the movement, allow entrepreneurs to bring vehicles or to bring technology that allows movement of those products or marketplaces. That in itself is going to create the next generation of entrepreneurs, either in refrigeration, either in moving goods, either even in creating supply chains that we never think about, right? For me, I think that it's a big problem, but we need to also figure out at that moment in time, what do we have, right? If you think about the US and the bootlegging business, when they said no more alcohol, what happened? Entrepreneurs just grew, right? That's what happened, right? So we also need to ask ourselves, in this day and time, in the next 5 years, what kind of opportunities will exist? We talk about healthcare, universal health coverage. We need to cover 51 million people in 5 years. What does that mean? There's a lot of entrepreneurs in community health services, people who can you can set up a company that will be able to hire these community health workers that can go out there and offer services. So you can become the Uber of community health workers. Nothing stops you. You still deliver the service of community health working, right? So those are things we need to think about. It's about being in this moment. What do we do? When the whole political regime and the whole economic regime is sort of focused towards one direction.
Mike, thank you. I want to round up now. I just want to ask my panelists what one thing you would like to change to make entrepreneurship, to encourage entrepreneurship here in Kenya. Just one thing. Claire.
Mine is obvious. It would be the attitude to talent participating or being a part of the startup ecosystem.
Okay.
Yeah.
Mike?
I think I'll be crazy and say that the first thing I would do is regulate the money that goes to lawyers from third parties, because That way, people could stop putting money in law firms and buying real estate, but start thinking how to put money into structured environments.
Rob?
Yeah, I think my magic wand is a growth mindset for the 1 million young people who are leaving school this year.
Yeah.
2 of mine were taken. I'll go with encouraging angel investors.
Okay,
Yeah.
great. Ladies and gentlemen, please join me in thanking my panel. Thank you very much. Thank you for joining me today. I'm now handing over to Chris for the final interview session of today's conference.